Welcome back to Real Estate Mindset. Today's video is gonna be absolutely bonkers. Now, the data is in, and the housing market is very quickly and very violently transitioning back into a buyer's market, which essentially means we need over 6 months of inventory. 6 months of inventory is considered a buyer's market. So the real question is, guys, is when will the housing market overall turn back into a buyer's market? So that's what we're going to explore today. We're going to dig into a Zillow article, and I'm going to bring on my very good friend Jullian Lopez, who's a realtor in the ditches, just to give us boots on the ground intel. So the name of the Zillow article that we're going to read today is titled Expert Panel Expect a Buyer's Market by 2023. And you guys remember, I'm not your financial advisor, even if I want to be. This is my personal YouTube channel. So please, guys, hit like, subscribe if you haven't, shoot me a comment below. You guys know that I absolutely love real estate. That's why I'm a realtor, loan officer, and instructor in real estate in the great state of Texas. But regardless, you guys, let's hop into this video and article right now. Metros in the South and Midwest are the least likely to see price declines over the next year. Vacation market areas are most likely to see price declines. Third bullet point. Rent growth and inflation should outpace stocks and home price appreciation over the next year, which is not good. Let's continue. Sky-high mortgage costs are driving down competition among home shoppers, and a market firmly in favor of buyers is expected next year, according to a majority of economists and housing experts polled in the latest Zillow Home Price Expectations Survey. The expert independent panel also expects rent growth to outpace inflation during the next 12 months as priced out potential home buyers exert additional pressure on the rental market. Home value growth, which hit record highs over the course of the pandemic, is now slowing as affordability challenges, magnified by quickly rising mortgage rates, are pushing many prospective buyers to the sidelines. Typical home values are tickling down slightly across the US and declining more steeply in some of the most expensive metros, as well as those that grew the fastest over the past 2 years. Although home price growth has slowed, the market is far from pre-pandemic norms. Zillow's latest market report showed listings typical time on market, while rising, is still 11 days shorter than 2019. Inventory is tickling up as well, but is still down almost 42% compared to 2019. The majority of the panel, 56% of experts, expect a significant shift in buyers' favor by sometime next year. Another 24% predicted the shift would come in 2024, 13% pointed to 2025, and just 8% pointed to a buyer's market after 2025. I think they're crazy, but whatever. After the frantic rush for real estate over the past 2 years, prospective buyers are finally seeing the calmer market. Those still able to afford home ownership are quickly regaining lost leverage, but this shift to a more balanced market is still in the early stages. Home shoppers priced out of the market face further hurdles through, as high and rising rents could cut further into their ability to save for a down payment. So that's good news for Florida, where a lot of coastal cities in Florida have second homes and investment properties. So hopefully that will lighten up pretty soon here in Florida. And also, which is interesting, is right now, you guys, we have 3 months of supply of inventory, 8.1 months for new inventory. So right now we're about half where we need to be for the housing market to be considered a buyer's market. But it's very interesting to see who voted for what. And what I'm going to do is let's dig a little bit deeper into the percentages of what expert voted for what year the housing market would turn into a buyer's market. Now, obviously, you guys know that I'm part of the 8% because I believe that we're going to have a buyer's market at the end of 2022, which means 6 months of inventory. But regardless, let's hop back into the article right now. All right, so here's the results of the panel right here. Now, Let's go over this in a little bit more detail. The question is, in what year do you expect the U.S. housing market conditions to shift decidingly in the favor of buyers? And as you can see, actually, it wasn't 8%. I misspoke last time. I'm actually part of the 12% because I believe it's going to happen in 2022, but only 12% of the experts agreed with me. The overwhelming amount is 44% at 2023, followed by 2024 at 24%, 13% 2025, 8% saying after 2025. To me, that's super crazy. Let's see what the paragraph says right here. Although the panel-wide 2022 expected home price appreciation rate tickled up to 9.8% from 9.3% in this most recent survey, all 107 survey respondents project home price deceleration in 2023. The share of panelists who believe their long-term outlook might be too optimistic jumped up to 67% from 56% last quarter. Why are these people continuing to be overly optimistic? But whatever. Inexpensive Midwest markets such as Columbus, Indianapolis, and Minneapolis are the least likely to see home prices decline over the next 12 months, according to the survey respondents, of which just 36% reported that home price declines from current levels were likely over the next 12 months. Fast-growing markets in the South, such as Atlanta, Nashville, and Charlotte, are also expected to retain their heat by a majority of panelists, with 44% of respondents indicating declines were likely. Markets projected to cool the fastest, with 77% of respondents expecting decline, are those that saw some of the largest growth over the course of the pandemic, including Boise, Austin, and Raleigh, North Carolina. So obviously the safe bet is saying that the buyer's market is going to come back in 2023, but I'm going against the safe bet. I'm saying 2022, even though we're going into months of historical price decline and inventory drop. So even though we're going into those months, I believe that demand is so crippled right now, the supply is still going to outpace the crippling of demand, regardless of how much inventory is coming on the market right now. But only time will tell. We have about 3 months to go to figure that out. Let's jump back into this article and finish it up. All right, so unfortunately, you guys, odds are that in most metro areas, rents are actually going to go up. The less people purchase homes, the more rent is going to increase more than likely and be more desirable. So that's actually not good. Now, obviously, Phoenix is a little bit different. Now, let's read this, and then we're going to jump into some questions for Jullian. The panel also gave their expectations for the relative growth of rents, inflation, stocks, and home values over the coming year. Rents expected to top growth ranks. Panel expectations for the relative growth of rents, inflation, the stock market, and home values over the coming years. And as you can see, you guys, rent is outpacing inflation, stocks, and home values, which is not good news. And essentially what that means is you better not get stuck renting, right? We don't want to wait too long. And don't misunderstand what I'm saying. I'm not saying rent forever. I'm saying double down right now so you don't get trapped as a renter. And by doubling down, what I mean is strengthen your purchasing power and keep up with the increasing mortgage rates by lowering debt, increasing income. Let's finish this out. Rent growth should remain strong in the short term as high home prices kept many would-be first-time buyers in the rental market over the next 12 months. Rents are expected to grow more than inflation, stocks, and home values. The panelists predict an average of 5.4% rent growth throughout 2023, lower than the 8.6% annual growth that they expect to see by the end of this year, but still higher than what Zillow data show to be just under 4% annual growth in the years prior to the pandemic. This demand for rentals has already spawned new supply in the pipeline. Builders responded to declining home purchases by ramping up construction on multi-family units like apartments, condos, townhouses, places like that, or quads, triplexes, things like that, bringing starts to the highest level in years. This is crazy. The panel projects stock prices will rebound over the next 3 years, outpacing growth in home prices and rents as overall inflation cools. So once again, you guys, unfortunately, what's more than likely going to happen in 2023 is rents will go up. So that's unfortunate. But again, you guys don't get stuck in that situation. So what I want to do now is let's get some boots on the ground data from Jullian Lopez, a great buddy of mine that practices real estate in Houston. So let's ask him 3 questions right now and see how he responds. Jullian Lopez, brother, how are you today?
Doing well, man. Doing well. Thanks for having me on. Super excited to be here. Really appreciate it.
Well, I see that your picture is a lot better than last time. Your audio is a little bit lagging, but we're going to do the best we can. I appreciate your time, brother. First question I have for you, and answer, take as long as you want to answer it. But the first question, brother, is: are we getting okay? So for your personal business and the business of your peers, obviously you work in a brokerage that's pretty successful. So are you getting more listings right now than you are buyers? Because remember, just a year ago, people were like, oh, where's all the listings? Where's all the listings? Everyone had buyers. So have you seen that change?
Absolutely. We've started to see that shift. It's been going on for a few months now, definitely since the rates have been going up. We're seeing less buyers on the market. And we are seeing a lot of sellers getting to the point where they've been, in the midst of, back and forth. Okay, should I do it? Should I not do it? Now they're actually finally putting their homes on the market. We're seeing a lot of different real estate, though. We're seeing land getting put out there. We're seeing mobile homes. We're seeing single family homes and a lot of new construction inventory to go with that. And that's going to translate into more options for our buyers, right? Because traditionally we see resale sort of coattailing on the brand new homes. So when the brand new homes are asking extreme prices like they have for the last 2 years, resale is quick to follow that, especially if it's not a super old home, if it's comparable to that new construction. And so now that we're seeing the new construction taking a little bit of a dip, price cuts, incentives, they're offering closing costs, those things, resale is starting to follow suit with, more days on the market, price decreases. They're offering bonuses to the buyers, trying to basically copy and paste what the new construction is offering.
All right. So essentially what you're saying is it sounds like you're getting a lot more listings than you were last year, and you're getting a lot less buyers. Is that fair to say?
Absolutely. That's fair to say. 100%.
So Jullian, my next question, man, and obviously, we know that we need 6 months of supply for our housing market to be considered a buyer's market. But can you talk, and then you cover this a little bit, answering the last question, but can you talk about some of the signs that you're seeing right now in Houston that is kind of showing you the market's turning back into a buyer's market from a seller's market?
Great question, Travis. Of course, we are seeing a correction and a shift in the buyer's market with the volatility in the marketplace, with the rate increases. Buyers are able to qualify for less home than they were a year or 2 years ago with the low rates. So absolutely, we are seeing that shift in the marketplace.
Yeah. Yeah. I mean, I know we need 6 months. So, let me ask you, Jullian, from, your opinion, being boots on the ground, when do you expect us to hit, the 6 months of inventory? When do you expect our market to hit the buyer's market? This year, next year, never? When do you think that will happen?
I think it's already happened, man. I think we're already we're at the tip of the iceberg at this point. We're starting to see the signs. We have the rate increases. We have incentives being offered, which not historically, but for the last few years, it's been a heyday, and we haven't seen those things. I don't think we're seeing the worst part of the market yet. I think there's still a lot of offers to be coming to the table. They're trying to make it happen with what they have right now. They still want to get top dollar, whether it's resale or new construction, but they're doing all this right now. And all these factors tell me that we are at the tip of the iceberg because they're scrambling, trying to make sales. And at the end of the day, something has to change if they're not making those sales and meeting their quotas, because management, I guarantee you, is breathing down all of the builders' backs.
Yeah. So, I mean, so you're saying that that, there's a buyer's market right now, but you specialize mainly in new construction. Obviously, new construction, we have over 8.1 months of inventory. So I would agree, definitely that's a buyer's market. And, other than that, Jullian, I really appreciate you, brother. I'm going to link Jullian's information in the description, and I'll pin it to the comments, because I get a lot of emails, asking me for help in Houston. I've told you guys I'm stepped out of the market till at the very, soonest I'll get back in is after midterms. But my brother right here, Jullian Lopez, is happy to take care of you. Is that right, Jullian?
Absolutely, all the time, man. We love helping people out. It's what we love to do, and we do it well. So happy to answer any questions or concerns anybody has. And good luck to you guys, man. It's a rough, it's tough out there. Make sure you have someone strong on your side to hold your hand through the process.
100%, brother. Stick with me, and I definitely appreciate you, man.
Thank you. I appreciate you as well, Travis.
All right, guys. Now that's going to conclude this video. I really hope you guys got some value. And really the point I'm trying to make here is definitely be waiting on the sidelines. But as you're waiting, double down so that you don't get trapped in a rental, because the reality is we need to strengthen ourselves as buyers to stay ahead of the increasing mortgage payments. And how do we do that? We eliminate debt and we try to make more money. Now, other than that, you guys, I hope you have a great day today. And if you're out there investing in real estate, I wish you luck, and I hope you win.